Good morning, everyone. Welcome to the show. Another topic for you today: how to avoid common mistakes in real estate. Real estate is one of the biggest things to invest in, besides stocks, bonds, 401ks, your own business. But real estate's a big one because everyone needs a place to live, and there's everywhere you go, there's houses. You see houses everywhere you go. Everyone needs a car, but a house is probably the biggest thing people need. So the first thing you need to do is conduct research, so you don't make a mistake before you invest in anything, any property. So there's sites like Zillow, Trulia. There's many others. There's many different sites that you can actually go look for in your area, and you can see, what the houses are selling for, how much they're paying in taxes. They'll have pictures of the inside of the house. You also can, there's a lot of things you can do, but get a notebook and start comparing houses in different areas, different neighborhoods, and before you even start looking at a house you might invest in, or you might live in, you definitely need to put the research in. You do have to have an investment goal and stick to it. So you have to know how much you're going to put in. Like if you're looking for something 100K, 150K, I would say you would have to, know how much you're looking to put in, how much you think you're going to have as a down payment. Most likely, because if you're a beginner, you're not going to pay for the house in full. So most likely you'll be, using a bank. Also, seeing how many rooms you want in the house, how many bathrooms, etc. There's so much that goes into it. I can't just pick this one, but I'm just trying to help you avoid certain mistakes, because people just like to jump in and get into it thinking they're gonna be rich overnight. But certain people do have horror stories of the stock market, and you don't want to be one of those horror stories. You want to be one of those people that actually got something, took the time, and had a success story. You do have to keep an eye on the market and trends. So like anytime you hear of the Fed, Jerome Powell, raising interest rates, which means either they when they raise the interest rates, that means you're technically paying more for the house if you get a loan from the bank. Obviously you want lower interest rates, but it just depends on what's going on in the world. If there's war, there could be more. If there's anything going on, it could just be more. So you have to, look at what's trending, and see, which houses going up in this area or going down in another area. And you have to find a balance, and you have to, look for something that would, make you, long-term money and pay for itself. You always want the property to pay for itself. And going in that, you need to avoid investing in properties that are very expensive or require a lot of work, like renovations. You can't be going for the big one right away. Obviously now I'm looking at a bigger property, and if I can get it, it's going to be a game changer. And that's going to start me on my path to success. So I'm trying my best to make it happen. And you do have to avoid any rehab projects, because I'll tell you, years ago, I think my second property was a 10-unit building, and there were so many repairs, and it ate up, like all the income. So I was basically in a negative. It was like a loss. So you want your properties paying you instead of you paying for the property. And if it needs extensive repairs, it's just gonna be an ongoing thing. It's like a never-ending thing. Because even the good properties in very good condition still have maintenance repairs. Because I have a property that was just redone a few years ago. There's plenty of little maintenance requests every week. So imagine you have a property that's needs repairs and it's older. It's gonna eat up at your capital. And and going into this, also I want to say, don't underestimate the importance of location, because you'll hear that all the time with the supermarkets or business, and now you hear with real estate, location. And location is so important. I remember, like I said, I had a property, and it was in it wasn't a war zone, but it was near one. It was close. So when you go over there, you never go at night, and look over your shoulder, and you can't leave the car unattended for too long. So it was one of those. So I suggest always having a good location, even if it needs more repairs. But if it's in a great location, you'll get the right people that'll take care of it. If you get in the wrong location, it could be the best looking house on the block. It has the best things, best washer, dryer, dishwasher. It could have the best of interior and everything. But you're in a horrible area. Good tenants are not going to come to those areas. So most likely you're going to end up with a bad tenant who's going to really destroy your property. And then when they leave, you probably might be lucky to get that security back. You're not going to give them security back because it's probably be damaged. They'll probably be damaged beyond repair. So you want to avoid that at all costs. So stay, unless you're a professional. If you're like a pro, have millions of dollars, then yeah, they go for those, because they're going to be at a steal of a price. But as a new person coming into the real estate game, I would stick with something in a great location that that is in at least good condition, that you can just you can manage yourself and build from there. Because once you have a tenant in there and they pay off that mortgage in 20 years, 15 years, 25, then that's all cash equity that you can use to buy another property, a bigger property, and then that starts your real estate journey. And before you even get into all this things I'm talking about, look for a professional. It could be a realtor, because a realtor. Most realtors I've met do have properties of their own, and they do have rental properties. So that's why they're in the real estate game. Not all of them, but some of them. So I would get their advice and ask some of the bankers. Some of the bankers also probably have done real estate, so they would be a good source of knowledge to go to. There is, online, YouTube, Facebook, etc. And you might, it just depends when certain people don't have your best interests in mind. So just make sure you get advice for as many people as you can. And when I get mentioned two sites, Trulia and Zillow. There's other sites. Just because they're saying it's, the house is worth 100 or 200K doesn't mean it's actually worth that much. Sometimes they're very off of their pricing. Sometimes they haven't updated in a couple of months. So I would say, sometimes you have to, do your own research and, like I said, comparables. That's why appraisers look for comparables of recent sales, so they can give you an estimate of how much the house is worth. And that's what you got to do with, it's called, when you're looking at houses, you got to look at comparables. You can also look at recent sales also, and then you can say, oh yeah, this 3-bedroom, 1-bath sold maybe 5 miles away for about $100K. So there should be a similar price if it's a 3-bedroom or a 2-bedroom house. So yeah, just you have to do extensive research. You have to do research, and then you have to do extensive research. It's called, and after you go for all this, then you develop your plan, because mistakes happen when you don't plan too often. So you have to come up with a solid plan, put a budget in place of what do you think it's gonna cost on maintenance, what do you think it's gonna cost on insurance, taxes, snow removal, electric, all this little stuff. You'll have to actually, write it down, and then, and then see what it's going to cost you as far as income and expenses to manage, maintain, and keep the property and have cash flow. Because everyone's going to tell you cash flow is king. Cash flow is king, and that's what you want. When you get in a property, it's cash flow. And you do have to, besides the being ready for the regular expenses, as I say, emergency fund when you're saving money, and you do have to have an emergency fund for extensive problems that happen. There could be flooding or, roof damage or, having to replace one of the mechanical systems, boiler, etc. Things happen in life, and you have to be extra prepared, or you get hurt. So you'll have to make sure when you do get that property, that you do have an emergency fund allocated just in case something major happens, that you can just pay it off. Because most of the time, if you have tenants, if it's something major, you have to get it fixed probably right away, or you're gonna have to either give the tenant some reimbursement on that rent. Yeah, so basically you want to avoid that problem. Just keep that extra money on the side, and then when that problem happens, you won't have a problem. And the last thing, before you purchase any real estate, any property, they call it due diligence. So my due diligence so I'm looking at a bigger property. You gotta check all the financial statements. Then of course, get the inspection, and then the major components of the real estate. Besides the structure, electrical, the gas, and the roof. And the roofs have gone up in price, so roofs are like a major issue. So if the roof is bad, you might have to walk away from the deal, because someone said, "Oh, I replaced it 5 years ago," but really they haven't replaced it for 15 years. So roofs are very important, especially on a commercial house, a bigger house. It'll cost more to do a roof. Anyway, these are some common tips to avoid mistakes in real estate. But I can't cover everything, and even if I covered everything, you still would have to prepare yourself, because there's so many unexpected situations and in the real estate game that you can't prepare for them all. So you just have to be ready for things once they happen. Anyway, hope this helped. Glad to see anyone purchasing real estate or thinking about it or putting their mindset in that frame, because if you do it right and do it correctly, you'll make some real money. Thank you again for coming to the channel. We'll see you soon. Have a good one. Bye.